Let's dive right into this explainer and uncover how a tiny physical location became the ultimate symbol of money, power, risk, and ambition. We hear Wall Street every single day, right? On the news and movies and political debates. But today, we're going to cut through all that noise. We're unpacking the secret history behind it, tracing its evolution, and looking at how this massive engine actually operates at its core.
What's absolutely fascinating here is the incredible contrast between Wall Street's tiny physical footprint. It's literally just a narrow street a few blocks long in lower Manhattan, and its absolute dominance over global financial systems. It's just staggering to think about. When a new tech company goes public, when a government needs to borrow money for infrastructure, or when a massive corporation buys out a rival, billions of dollars move through this specific system before most of us even realize what just happened. It quietly shapes retirement accounts, pensions, and the daily economic realities of people literally all over the world.
Part 1. From Wall to Marketplace. To understand how we got here, we really have to look back at how a literal wooden wall transformed into the epicenter of global commerce.
So picture this. Back in the 17th century, New Amsterdam was a bustling but pretty vulnerable Dutch settlement. To protect it from land attacks, the settlers built a solid wooden defensive wall right along the northern edge of their town. And the dirt road running right beside it, well, it simply became known as Wall Street. Now, the wooded wall eventually rotted away, but the name stuck. By 1792, local merchants started organizing informal trading posts along this route. And as we rolled into the 19th century, this exact street rapidly evolved into a massive bridge for American industrial capital. It became the spot where merchants and investors aggressively traded securities to fund a rapidly growing nation.
And it all started with just 24 stockbrokers and merchants. In the spring of 1792, these 24 guys gathered outside under a sprawling buttonwood tree and signed what famously became known as the Buttonwood Agreement. They simply agreed to trade securities with one another under a specific set of rules with established set commissions. It was a remarkably basic idea, to create an exclusive, trusted marketplace. But that single piece of paper, it laid the very foundation for what would eventually become the modern New York Stock Exchange.
Part 2. Fueling the American Machine. As America rapidly industrialized in the 19th century, with railroads spreading and massive factories expanding, Wall Street had to evolve to meet an absolutely massive demand for funding.
To pull this off, Wall Street mastered a core, absolutely vital mechanic. Imagine a growing enterprise, a company that desperately wants money to build a massive new factory, or maybe lay down hundreds of miles of railroad tracks. It is way too expensive for just one person to fund. But at the exact same time, everyday people and investors out there have savings, and they want an opportunity to earn a return on that money. Wall Street steps in as the ultimate bridge. It became the essential intermediary, efficiently connecting the people who have capital with the people who need it to expand.
By making capital mobile in this way, it literally changed everything. Suddenly, an investor sitting in a coffee house in New York could own a profitable piece of a growing railroad company hundreds of miles away in the Midwest. And more importantly, the risk was no longer falling entirely on the shoulders of one local business owner. Instead, it was distributed evenly among thousands of different investors. This was a total game changer. It fundamentally shifted how businesses could scale, allowing them to grow way beyond the personal wealth of their original founders.
Part 3. Panics, crashes, and rules. But, as we're going to see, this rapidly growing financial power created dangerous new vulnerabilities tied directly to human emotion and a severe lack of regulation. I really want you to think about this question because it is the Achilles heel of the entire financial system. What happens when confidence disappears? When speculation drives prices far beyond what a business is actually worth, a collapse becomes inevitable. And history shows us that when that vital, foundational confidence vanishes, the resulting economic pain forces major structural changes to the way our country operates.
When wild expectations collide with harsh reality, modern regulations are born. Let's start with 1907. A failed, highly leveraged attempt to manipulate copper prices triggered a massive financial panic. Bank runs started immediately, and credit completely froze. Because there was no central bank at the time, private banker J.P. Morgan actually had to step in, using his own vast capital and influence to single-handedly stabilize the system. The outcome? America quickly realized it couldn't rely on one wealthy guy to save the economy, proving we desperately needed a central bank. That directly led to the Federal Reserve. Fast forward a bit to 1929. After a roaring decade of wild optimism and unchecked speculation, the stock market spectacularly crashed, ushering in the devastation of the Great Depression. That catastrophic event birthed the Securities and Exchange Commission, or SEC, in 1934 to finally enforce strict rules, mandate transparency, and restore public trust.
Part 4. The Digital Global Network. Following World War II, the American economy surged again, and Wall Street adapted right alongside it, transforming from a physical meeting place into a highly sophisticated, lightning-fast digital ecosystem. Look at this incredible shift. The old days of human brokers shouting orders at each other across crowded, paper-strewn trading floors were gradually replaced by silent, glowing server farms and global electronic networks. Today, computers execute complex trades in fractions of a millisecond. Financial information is instantaneous. An economic event happening in Tokyo or a political announcement in London triggers an immediate, automated market reaction in New York. Wall Street basically became less of a physical street and much more of a global, interconnected nervous system. However, this incredible, interconnected speed meant that when things went wrong, they went wrong everywhere all at once. By 2008, financial institutions had created unbelievably complex securities tied to mortgages, essentially bundling together thousands of individual home loans, many of which were highly risky, into giant financial products. When housing prices fell and those underlying mortgage securities failed, major institutions like Lehman Brothers literally collapsed. The crisis didn't just stay local. It spread instantly through these digital networks, causing millions of everyday people around the globe to lose their homes, their savings, and their jobs. It really forced everyone to ask, had financial innovation simply become too complicated to manage? Today, coming out of those reforms and decades of technological advancement, the definition of Wall Street is vastly different. It is no longer just a physical street or even just traditional commercial banks and stock exchanges. It's a sprawling, tech-driven ecosystem. It includes aggressive hedge funds, massive private equity firms, highly volatile crypto markets, advanced AI platforms analyzing alternative data, central banks setting policy, and millions of individual investors trading right from their smartphones on their morning commute. Together, this incredibly diverse network moves trillions of dollars around the world every single day.
Part 5. The Engine of Expectations. Because beneath all the complex algorithms, passive index funds, and AI trading platforms, the true fuel of Wall Street isn't actually just money. It's human psychology. This is an absolutely crucial shift to understand. Financial markets don't just passively report on how the economy is doing, like some sort of thermometer reading the temperature. They actively shape decisions far beyond the trading floor. The collective optimism or panic of investors dictates interest rates that impact global housing markets. It determines whether small local businesses can get the credit they need to survive a downturn, and dictates which giant corporations have the cheap capital to go out and acquire their competitors. And this brilliantly illustrates the ultimate truth of this entire system. Every single stock price you see on a ticker is simply a collective belief. Every investment made is a prediction about a highly uncertain future. Markets can wildly rise while the real underlying economy is struggling, purely because people believe tomorrow will be better. It is at its very core a massive expectation machine.
When it comes down to it, investors aren't really buying today's economy. They are obsessively asking this single question and pricing in their expectations for tomorrow. What happens next? Sometimes those expectations are spot on, rewarding the visionaries. But sometimes millions of people start to believe a flawed story at the exact same time. And that is exactly how massive, destructive financial bubbles form right before reality eventually arrives to pop them.
The technology and the institutions, they might constantly change. We went from wooden walls to buttonwood trees to global AI trading algorithms running in the cloud. But the core driving forces, greed, fear, confidence, and panic, they remain remarkably consistent centuries later. The fundamental emotions driving the market today are the exact same human emotions that drove those original 24 brokers way back in 1792.
Ultimately, Wall Street was never really about the stone buildings or the trading floors. It's this powerful, invisible network that channels our collective belief that money can be moved toward opportunity. It's a complex system built entirely on relationships, access to information, and boundless human ambition, turning those raw ingredients into tangible, world-shaping economic power.
So, as we recognize that this invisible network continues to shape our civilization long after that original wooden wall vanished, and as you navigate your own financial life within this massive ecosystem, you have to look inward and ask yourself, What expectations are you buying into today?